Alright, what's up, guys? Just a quick Monday night analysis. Nothing too crazy. Probably gonna be here for like 30 minutes, 40 minutes. Um, Going over what happened today. Okay, going over what happened today, and just going over our trades for the day. Kind of doing like an analysis. So if you guys were here this morning, we took a short around here somewhere. Let me see. I think from 82 to 38, right? We took a short from 82 to 38. This is when we were getting some pretty heavy delta, really heavy delta. And then as we continued on, we got a lot of absorption. So we have some zones here from early this morning. We just went right past the zone. We had a little resistance here at the swing low, right here, right? But ultimately, we flushed this area down. Let me go to 10:05. Take a look at the footprint and see. Gonna kind of replay what happened. Ten oh five. Gonna replay what happened at the 10:05 candle. We're gonna go back and look at what happened in the afternoon. Mark out some levels for tomorrow morning, just to get kind of some of that kind of out the way. Um, and then tomorrow morning we'll do an additional analysis. All right. So here we were consolidating in this zone a lot. And we had that area marked out. That was a pretty big imbalance. Got respected, came back down. Would have been a very, very nice short entry. Okay, so let's see what happened here. Okay, we got a 500 delta, 200, maximum 800. So no, okay, all right. Mostly I'm just streaming this to document my entire thought process. Okay. All right. Mm-hmm. So it looks like this bar had a 2500 delta. Got a little absorbed here. Couldn't break the high of this candle, 85. It also hit session VWAP perfectly. And then we got hit with an almost negative 6,000 delta. That's extreme. We got a lot of imbalances coming down. An imbalance right here. Marked out this imbalance. This is the closest imbalance to this candle opening. Came back up, retested that imbalance, and I just went straight down. This bar had a maximum of a 907 delta and closed red. So classic absorption there. And yeah, this would have been a phenomenal short entry, a retest of this zone. I think we marked this out a little bit too late though. We were still waiting for a little bit more confirmation. I mean, negative 6,000 delta should have been the confirmation, but I don't think I was paying attention to that. And then we just continued the flush all the way down. Yeah, this was some. So this would have been another good short entry if you missed the other short entries. This had a maximum of 700 delta. Now it's at 600. And just got absorbed completely. And then continued the flush. So I'll say from the close of this candle, the 61 to the bottom of the flush, about, yeah, you'd get like a nice 50 pointer right there. And in fact, I think, well, we got in, we shorted at 81, so a little bit higher, 81. We didn't get the full move. Yeah, so we shorted right here about putting control. Flushed, absorption, buyers got absorbed here, and sellers continued that downward movement. More absorption here. You can tell just by looking at the max delta, the third row. This bar had a maximum of 500 delta, just got eaten up by the bears. This as well, green delta, candle closed red, maximum of 1200 delta, big time absorption, and then continue the flush. We got out. We got out pretty early, man. I'm not gonna lie. We got out at point of control at 9:39. So right here, 9:39, when things were starting to stall, I knew that this absorption was going to continue a flush for like another 20 points at least. But typically when you see sellers stalling like that, I mean, we went from a maximum of a 5,000 delta, negative 5,000 delta a couple bars back, and now it looked like the momentum started to slow down. So as you can see, negative 1,600 and negative 1,900, negative 174, 300. So the selling momentum started to slow down, and then we got a bit of consolidation here before making another low. And so typically these consolidation periods are, I mean, yeah, got another consolidation. Let's see the break of this low here. Okay. 26, 480, 1300, negative 1600. Yeah, this broke down pretty nicely. We had here, okay, oh, so this would have been, okay, so this bar right here had a maximum of 1200 delta. Got eaten up pretty well. Point of control share across 3 bars. 923, the high was about 937, okay. And then we continued flush, broke the range, really strong delta. So this consolidation period was just collecting liquidity for a stronger move down. And then consolidated again, and then another move down. Just consolidation all over the place. You see these blue bars, it's just absorption. So when both sides are getting absorbed, then you're just going to be consolidating for the rest of the day. That consolidation started to happen. We didn't get a breakdown until 1 o'clock in the afternoon. So in hindsight, it's pretty good that we got out at this level, because I do not trade past 11. Trading past 11 for me is a no-go. Just because once you spend that much time on the computer, your brain starts to get fried, and your decision making goes down the drain. So it's a good thing that we got out where we got out. Also, this came back up to right next to our entry. That probably would have not been good for our mental capital, sitting through like a 30-40 minute trade, or not even. That's actually like about a couple hours. Yeah, guys, I mean, going for really big swings, like shorting down here and then getting out down there, going for those big swings, yeah, you're gonna make some money, but you need to think also the mental part of trading. How is your mental capacity gonna do while you're holding the trade for more than an hour, 2 hours? And not only that, I mean, let's think about it. When we were down here, we got out at about, that's about $1,000 profit, like 950 and some change. Let's just round it up to like 1,000. You see your position about 1,000 in the green, and it comes back up to almost break even after a course of 2 hours of you holding that same trade. You're going to get exhausted pretty fast. Your mental capital is going to go down rapidly. And mental capital is very, very important, guys. It's what you use to make smart decisions and ultimately make money at the end of the day. So if you're burning out your mental capital by holding on to a move, then that's a no-go. It's not a very smart thing to do. So just get in and out quick. That's why I like trading with size. You can trade a couple micros, you can trade 3 or 5 micros, but you're going to be in a position for a lot longer. You're going to be left exposed to the market for a lot longer. I'd rather trade a mini, get in for like 20-30 points, and if I hit a home run of like 50 or 60 points, then you make a big, and with the micros, when I used to trade micros, I used to, it wasn't uncommon for me to get 70-80 point runners. I would get some 70-80 point moves. So I couldn't imagine what that would be like with the mini. That would set you up for the whole week. You would have room to play for the whole week. So yeah, trading with minis is much better than trading with micros. Of course, if you have very good risk management and you have precise entries, to go for it. Trading with minis allows you to get in and out the market fast, especially if you have good entries and you follow your risk management, right? So let's So that was that breakdown. Let me take a look at the ES. I remember we were looking at the ES a bit today. Is the ES? Yeah. Yeah. Yeah, the ES broke down. Swing low, that's where we had that consolidation period. It seemed to have gotten there. This was a swing low. Yeah, so the ES was really late. So we could have. What you could do is, considering that the ES got to the swing low. Let's see, got the swing low at 10:35. The NQ got to the swing low at like 9:40. So for a good time, there was a divergence between NQ and ES. What would have been the smart thing to do is see that divergence, see NQ reach swing low, which would have been what, 9:35 or 9:45, I think, and short that. You probably get stopped out here. I mean, we only started trading this afterwards, but shorting that divergence, all the way down to swing low. So I mean, let's see. I mean, you short the wick test zone that we had here about 06, get down to the swing low at 88. You know, that's almost a 20-point move. That's about an 18-point move on the ES. And 18 points on the ES is pretty good. I mean, that's 50 points. I mean, $50 a point. Yeah, that's about a $900 move. So, you know, you could gain an extra 900 from that breakdown on the ES. You know, trading divergences is always good. With the NQ and the ES, it works out very well a lot of times. And so that's another play that you could have done. Also, looking at the footprint on the ES would have helped. Let's take a look at the hourly of the NQ. All right, not much. I'm just gonna do a quick analysis on the candlestick hourly time frame. I'm gonna go study some stuff, like a test I have tomorrow. So we're just gonna take a look here. All right, NQ looks like we had a wood test. Yeah. Okay. All right, guys. So I think early on in the day, I said for us to be in a downtrend, at least on the hourly time frame, we need to break this low and either this low or this low. Okay. I'm going to be looking for us to break this low just to confirm, because the market has been very bullish lately. Very, very bullish. And not only that, but this is a very questionable low. I want to get the major swing low of the major up move, which would be right here at 826. So we break 826, guys, we're going to be in a downtrend. 826 is also the low on the daily candle. So yeah, 826 is a very, very important level for us to break. I think the ES, yeah, about 58 on the ES. Let me grab that real quick. So 58 on the ES is equivalent to the 826 on the NQ. So let me do this with one. Awesome. Hourly ES, I'm not really. No, let's see. That's gonna be important as well. There we go. Yeah, so that's what, about 60 to 58. Yeah, more or less the same. Yeah. Okay. More concerned with the NQ though. The NQs are bread and butter. But yes, so it's at 826. So it's not really a precise level, is it? It's 818, whatever. You guys see the line. 818. 818 is what we need to break to be in a downtrend. Break 818. The next low we need to break is 366. It's also below the 50-day moving average. But if we break 366, guys, we're gonna break 214. We're gonna break what is this, 167, 156, and we might get a revisit of the 16K region again. That's gonna be a very, very big move down. I don't foresee that happening anytime soon. I mean, that's gonna be a major downtrend. Um, let's say we break this 818 area and we come down and visit 371. This is gonna be a very good fight. Right here, 371. So if we break 371 and 220 doesn't hold, or this next area doesn't hold, then you know you can kiss the bull run goodbye, right? So these are the next three levels we need to break in order to get a major downtrend. Okay. That breaks, then, and look at today. We had a lot of volume today, a lot of selling. That could have just been large part of it was most likely buyers taking profit, right? So it's not like we're getting in a paradigm shift, like we're getting new sellers coming in. Could just have been a lot of take profit, but that's where we're at right now. Anyways, let's get on with the analysis. We got here 16 candle on the hourly. Let me take a look at that. 16. 16. There's nothing crazy down here. Just have one imbalance. I'm still gonna mark that off as a gold zone though, and hold on. I just want to say my this zone played out really well. Retested that zone, boom, fucking dumped that bitch. Was that 9? Yeah. Tested that zone and we dumped this fucking bitch. I mean, I'm telling you, man, my zones work, bro. They work. So yeah, let's mark this out as gold. Actually, kind of tempted to put that to 2 o'clock. This, I'm going to delete that. Give me a quick second. Copy that. Okay. All right, there we go. Get that zone. We lock it. See if we got any epochs down here. I'll count that. Okay. So we have this zone. And that's it. Well, actually, let's see here. 11 o'clock. This is 11 o'clock. Nothing crazy here either. Got an imbalance, another oversized imbalance, volume sequencing, point of control, the previous bar. Yeah. If I'm looking here correctly, yeah, there was a bit of absorption going on here. Because if you take a look, all right, like 829 absorbed, 587 absorbed, 912 absorbed, 1000 absorbed, 1500 absorbed, 1800 absorbed. Yeah, all right, we're gonna mark that out as well. Get that gold as well. This zone right here. This is 039. 083. Alright, that's it. See if there's anything else here on the way. Nope. Sometimes on the way down to our early candle, you'll see a bunch of stacked imbalances that you can use. It's very, very useful, very helpful. Okay. Alright, for NQ so far, that's it. It's nice and simple. Let's take a look at bonds and yields. Bonds and yields not really doing a whole lot. Let's see, this morning at about 10, 9. Yeah, big spike in yields. I mean, in bonds, tops bonds yields. Okay, so yeah. Essentially what's going on. Give me a second. So guys, essentially what's going on is like what Johnny said earlier this morning. The market is getting a paradigm shift. Originally, bonds and equities. Well, this is when I started trading, so it has not always been like this. It changes every once in a while. But until before recently, bonds and equities used to be positively correlated. So that means bonds go up, equities go up as well. Yields would be negatively correlated with equities. So typically, if you were going short, you'd want to look for a rising yield, right? You'd want to look for the 10-year to be rising. Now it's the opposite. If you're short, you want to look for the bonds to be rising, because what's happening is now people are taking their money from equities and putting it into a safer place, such as bonds. My theory is the market is being a lot more speculative now because we've been bull tarding for almost no reason. So that means the market is no longer a safe investment to put your money in this speculative environment, right? In this volatile environment. So now people are looking for safer investments to put their money in, such as bonds. It's just a theory. I could be totally wrong, but it's okay. This, oh shit. I'm gonna put that down here. Alright. That's NQ. The ES. It's almost the same. The ES looks very wicky. Like just a ton of large wicks. That's very unusual for the ES. Very unusual indeed. 63. Wow. 71. Fucking crazy. I'll take that as well. Okay. Let's go here to ES. Okay. That sounds good. Alright, we got those zones down. We will mark this tomorrow later. So yeah. Alright. So we got the NQ. Okay. Bonds and yields is here as well. NQ. Okay. Looks like that's it, guys. Let me see if there's anything else. Make sure I'm not missing anything. No, I don't think we're missing anything. I think we're good. We'll optimize the zones on the 5-minute chart tomorrow when we have a little bit more of the overnight action moving in. And let's see, tomorrow we got oh, what was it? Let's see tomorrow. Yeah, any news tomorrow? We have Jolts. We have non-farm as well. And Jolts, I actually have my notebook right next to me. I have Jolts right here. Let me see Jolts. Okay. I have here in my notes, okay. If Jolts on FOMC week, the initial move is short-lived, cannot be trusted to create a trend, has to be scalped. If Jolts is not on FOMC week, initial move lasts much longer and creates a trend. That was back tested on Thinkorswim. Okay, let's see. It took short on Jolts news with a huge sell-off, but reverse, took your stop. Okay, let's see. Entry. I had a $150 losing day that day. It's the last day today. 220. Whew. It's been a while. Let's see. All right. Okay. So tomorrow's Jolts. Also got non-farm in the morning. I'm not gonna trade non-farm. It's too early. I'm not gonna get back in time. But we can trust non-farm to create overall trend of the day. And this motherfucker's talking at 10, dude. You gotta be fucking kidding me. Oh my gosh. Okay. Okay. You gotta be. Why are you talking tomorrow, bro? Can't you shut your fucking mouth for once? I can't wait for Trump to fire this fucking guy. Okay. All right. Well, tomorrow we're gonna be getting this fucking idiot to speak, and we have Jolts. So we'll make the game plan tomorrow morning. If you look here, March we ain't getting a rate cut. May we are definitely not getting a rate cut. June I don't think so either. We're only getting 2 rate cuts this year, guys. And it's not going to be in June. And depending on what he says tomorrow, it's going to seal the deal on that. So, fuck, dude. This fucking guy talking tomorrow kind of ruined it. But it's okay. We will make do with what we have. Alright, guys. That's it for today. I'm going to see you guys tomorrow morning, right? Take care.